Today, folks, if you logged into your stock portfolio or took a look at your favorite tickers today, like I have, I'm sure you noticed that the market is absolutely tanking. And it just goes to show that the market as a whole still seems to highly care about the interest rate cycle and the inflationary pressures driving this. So we're going to break down those inflationary pressures that took the S&P down 1.68%. It took VCE, the Canadian markets, down by 2.3%. The Qs down 2 percentage points. VDY, your favorite dividend ETFs, all getting hit today. And yes, it all has to do with the 3.1 percentage points that came in at the inflationary data for January of 2024. But keep in mind, this is based on a trailing 12 month. And if you, like I, believe that inflation is dead, because the data is definitely saying inflation is dead, guys. You take a look at the month over month, and we are significantly getting lower months of inflation than we are higher. We are just getting these odd events where inflation is spiking based on the cyclicality of certain aspects of the inflationary data. And let me explain what I mean by this, because firstly, if you just take a look at what's going up, right? Food jumped up pretty dramatically compared to the 3-month prior data. And that could be cyclical in nature. I'm not sure what's driving it. It seems odd because I've seen food prices generally come down in my food stores like Walmart or No Frills or wherever you're shopping for food, because God knows I'm not the one shopping at places like, Whole Foods or anything that Amazon is offering, those premium shopping experiences. But you take a look, energy's down a lot. The only thing that was up in energy was natural gas, which was utility and gas services. And that made sense because natural gas spiked for a little while and is continuing to pull back. So that's likely a one-off event here. If we kind of scroll down and take a look at what else is really driving, and most of it really comes down to shelter. Shelter has been basically exuberatingly high, and there's not a lot of explanations for exactly why, because the higher interest rates should be bringing down home prices, but they're not. So why would that be? Well, maybe people don't want to move. They don't want to sell their property because they're fearing they might get a lower price than they want. They're fearing they're going to have to take on a new mortgage if they go buy something else, and they don't want to get stuck in a higher interest rate. I mean, you have tenants, right? Tenants don't really want to move either, because if you live in places like I do that are rental controlled, if you get a good rental price from a few years ago and you move, you're going to get the market rate of rent, which is insane right now. And I'm going to do a whole specific video on this because I know real estate agents right now that are complaining they're having a hard time getting people to rent their clients' properties because the rent is just so damn high and people don't want to spend that, right? So we're getting in this weird situation where it's kind of come to a slow standstill, and we know this because the volume of real estate sales have dropped pretty dramatically, even though prices are sustaining pretty high. So this is one of the most causing factors. But if you, like I, can recognize that this is temporary, and it's likely that these things are going to start to level off, because let's be real, you raise interest rates, the landlord's got to raise the prices on the tenant to justify the cost of the mortgage. And if you own a mortgage that's coming up for renewal, your mortgage payments are going to go a lot higher. So all of that is kind of baking in, and it's taking a lot longer to kind of reach parity with the market. But again, this is nothing to freak out over, in my opinion. I mean, yeah, they're not going to cut interest rates probably like everybody wanted in spring. Calm down, folks, because I remember last year we're like, it's likely they're not going to cut till summer or fall, and it's not going to be huge percentage point drops probably until 2025. So why is everyone freaking out? This is just continually opening up that window of opportunity to buy stocks at discounted prices. These are the moments where you want to be buying, folks. I mean, you take a look at the broader market today, and I got to take advantage of this stuff. I'm going to transfer some money here soon, I think, and just start gobbling these up, because you can't get over this, right? Like the banks here in Canada are down a couple percentage points today. Apple, these big tech companies, which again are as so-called price to perfection, need to come down a little bit, and it's healthy to see them come down, which is great. So this is opening up some more value here, but again, nothing significant. I mean, these stocks dropped dramatically at the morning open, and then they kind of rallied back, and now they're dropping again, right? I mean, I think you look at some of these companies, and this was a bad day to post bad news, because I think Shopify posted some news on guidance. I think their earnings were good, but they lowered their guidance on a day where the inflation data came out pretty negatively, so the stock just tanked by like 11% here, which was quite dramatic at the market open. But yeah, outside of that, I mean, a lot of these infrastructure-based companies are getting hit because they're still going to struggle with the higher interest rates. But I told you, big telecom giants, all these big companies, they should start seeing a leveling off, because if the interest rates don't keep going up, that means that their payments on debt shouldn't continue to skyrocket, and they should start seeing a leveling. Because I just did a video on TELUS, and when you see these companies paying out over $1 billion in interest rates that are up 50 to 100% year over year, I mean, that's going to stop. Like this, going into this year, we should stop seeing like 50% growth rates in interest payments, right? So that should start to slow down and stop hindering the earnings per share. So just something to keep in mind. But yeah, a lot of small caps getting wrecked today, and again, it's just opening up this window of opportunity that I will likely take advantage of. Probably either today or tomorrow. I'll probably buy some stocks, and I'll let you know what I'm buying if you consider subscribing for those updates. But I'll pass the question off to you. I'd love to know what you think about this in that comment section below.